Were you aware of what specific factors can make Tesla stock soar? People in the financial industry are well aware that there are various factors that affect stock prices, which either make them go higher or lower. Stay tuned and keep watching to find out more about this. Although the stock market can become truly unpredictable, experts can still make predictions based on available data. That said, one registered investment advisor laid out 10 Tesla catalysts. Today you will find out the reasons why Tesla stock will go way higher. Tesla may not be a hit with institutional investors, noted bull and future fund founder Gary Black said, citing Bloomberg data. Tesla stock is underowned by institutions, the fund manager said. Still, future funds actively managed the Future Fund Active ETF has Tesla as its top holding, accounting for about 12.4% of the total. Gary Black is the managing partner and co-founder of the Future Fund LLC, an SEC-registered investment advisor focused on investing in growth equities of companies that are changing the world. Gary has extensive experience spanning nearly 30 years in top management positions at some of the most well-respected global investment management firms. Earlier in his career, he was named CIO at Goldman Sachs for the U.S. Asset Management Group and named to the firm's partnership committee. His investment industry experience began at Sanford Bernstein in 1992 as a senior research analyst. Gary was rated the #1 analyst in his sector by Institutional Investor All-American Research Team for 6 consecutive years from 1993 to 1998, including his first year in the industry. Gary has been featured in Barron's and is frequently called upon by the financial press for his insights into the equity markets. According to him, the following are the Tesla catalysts as of August 2, 2022. First is the 3-for-1 stock split in August. Second is the S&P potentially upgrading Tesla's debt rating in August. The third is the EV credit in September. Fourth, AI Day in September. Fifth, Twitter deal overhang lifting by October. Sixth, Tesla initiates buyback in October. Seventh, new gigas in the UK and East US for Q4. 8. FSD beta release Q4. 9th, Cybertruck launch by mid-2023. And finally, Robotaxi launch in 2024. That said, Black has a $1,600 price target for Tesla stock over the next 6 to 12 months. Tesla Inc.'s board of directors has approved a 3-for-1 stock split, which the company says will make stock ownership more accessible to employees and investors. The electric vehicle company said that each stockholder of record on August 17th will receive a dividend of 2 additional shares of common stock after the close of trading on August 24th. Trading will begin on a stock split adjusted basis on August 25th. This is Tesla's second stock split, with the first one announced on August 11, 2020. The 5-for-1 stock split took effect on August 31, 2020. Between these periods, the stock ran up by a massive 81% compared to a more modest 11% advance by the NASDAQ 100 index, Gary Black noted in a tweet. Black also shared a Business Insider story that delved into Vanda Research's note, which said retail interest in Tesla has risen considerably ahead of the imminent 3-for-1 stock split. Net retail purchases of Tesla reached $693 million in the previous 5 sessions, Vanda reportedly said in its weekly note, adding that purchases are skyrocketing. Retail investors have never been so bullish since summer 2020. However, as a percentage of float, Tesla's institutional holding sports a better number of 53%, but it is still the lowest in the list of 7 tech names, since Alphabet Inc. has the highest institutional ownership of 85% among the large cap tech names. Data shared by Black on Twitter showed. Float refers to the number of outstanding shares less any restricted shares. Restricted shares are those securities that are not fully transferable from the issuing company to the person receiving the award until certain conditions are met. What factors do you think will make Tesla stock either soar or dip? Share your thoughts in the comment section below. Elon Musk-led Tesla took the last spot in the list of 7 tech names for which data was shared. Institutional holdings accounted for 44% of Tesla's outstanding shares. What is scaring off institutions? A weak board of directors, key executive risk, capital allocation, high valuation, and the divided attention of the CEO could be the potential reasons for relatively light institutional investors, Black said. However, one of these points has been noted in one of the 10 Tesla catalysts, according to Black. Twitter deal overhang lifting by October. In fact, when Tesla CEO Elon Musk was asked on Twitter if he was done selling, he said, "Yes, in the hopefully unlikely event that Twitter forces this deal to close and some equity partners don't come through, it is important to avoid an emergency sale of Tesla stock." When further asked if he will buy back Tesla stocks if the Twitter deal doesn't close, he simply answered, yes. The Tesla bull also noted the company's non-investment grade debt rating may have restricted some mutual funds from owning the stock. This could be less of a factor due to the company's strong balance sheet and the expectations that rating agencies will upgrade its debt rating this year, he said. This too is presented in the list of catalysts for Tesla, the S&P potentially upgrading Tesla's debt rating in August. Tesla is expected to be about to finally get rid of its junk bond rating and become a blue chip, something somewhat overdue for the sixth most valuable company in the world. Despite delivering profits for more than 2 years straight and building a cash position of over $18 billion while sitting on very little debt, Tesla is still rated as a junk bond by rating companies like S&P Global Ratings and Moody's Investors Service. However, rating experts and analysts are now expecting Tesla to finally be upgraded by the end of the year. Joel Levington, Bloomberg Intelligence credit analyst, said, "Tesla is still generating a huge amount of cash. At some point, rating companies will have to act, and I wouldn't be surprised to see an upgrade to investment grade happen before year-end." Although this may not be important for the average investor and Tesla shareholders, it is a big deal for some large funds that often have a policy not to invest in companies that have anything less than an investment grade rating, often referred to as blue chips. This has prevented some large funds from investing in the company, which resulted in Tesla having a smaller percentage of its shares being held by large institutional investors compared to its peers with extremely large valuations like Apple and Amazon. Tesla was upgraded to BB+, one step below investment grade, by S&P last October and by Moody's in January. Head of North American auto sector ratings at S&P, Nishit Madlani, even stated in June that Tesla is likely going to be upgraded by the end of the year. Other catalysts like Tesla FSD and Cybertruck have been previously discussed in the recent Q2 earnings call. In fact, in the earnings call, a lot of projects were discussed including Cybertruck, FSD, and 4680 among others. Tesla still considers the much-awaited Cybertruck, electric semi-truck, updated Roadster concept, and other speculative projects like the humanoid robot as in development. Musk shared that the team continues to focus on Cybertruck production readiness and some future platform design. Musk says Tesla is hoping to start delivering the Cybertruck, an experimental-looking pickup, in the middle of next year. "I think it might actually be our best product ever," Musk says. Regarding Autopilot, they deployed FSD beta with city streets driving capability to over 100,000 owners who are very happy with the capability of the system, and Tesla aims to continue to improve it every week. Moreover, FSD beta is on track to be released for all North American customers before the end of this year, according to Musk. On a different note, Gary Black said that Tesla's market capitalization should be $4 trillion since it is currently worth $1.09 trillion. On $100 per share earnings, he allocates a 30 price-to-earnings ratio, which results in a $3,000 price target. He added that if 1.4 billion shares were outstanding, Tesla's market capitalization would reach $4 trillion. Black further stated that electric car penetration in the automobile industry will reach 60% by 2030 and that Tesla will have a 20% share of the EV market. He believes that by the end of the decade, Tesla will be able to deliver around 10 million vehicles per year, given that worldwide light vehicle sales have reached 85 million units. Make sure to visit our channel and watch our other videos for more Tesla stock content, and don't forget to hit the like and subscribe button before you go.